The Reserve Bank warns that delays in inflation falling could trigger an interest rate rise. ANZ criticised for charging fees to dead customers, and a US Supreme Court decision puts the president above the law. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 3rd of July, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the Reserve Bank has warned that further delays in reducing inflation could spark an interest rate hike in August because the central bank fears embedding higher price expectations.
In the Reserve Bank board's minutes of its meetings from 2 weeks ago, released yesterday, the bank said its forecast for inflation to return to the midpoint of the target band, that's about 2.5%, by the middle of next year is at risk. Pushing out the timeline carries the potential for embedding higher inflation expectations, which is not acceptable to the board. And I quote, "Members acknowledged if inflation expectations were to rise materially from current levels, it could require significantly higher interest rates to bring inflation back to target." The board said the limited inflation data since the previous meeting had increased the risk that getting inflation lower would take more time. May inflation data shows that both headline and underlying inflation has accelerated. The next key data point is at the end of this month when the June quarter inflation numbers, which are far broader than those May numbers, when the June quarter inflation numbers are released.
Look, just looking at all of this, it looks like it could be a line ball decision.
Yeah, I think it's much closer than we thought. The inflation numbers this month are critical. The Reserve Bank board also talked about what was happening with consumption. So we've spoken lots on the show about consumption being weak. Well, the board reckons that consumer spending seemed to be higher than previously expected. The global economy is slowly improving and business conditions are stable. Put all that together, that could limit the extent to which current interest rates slow the economy. Hence, you might need higher interest rates. However, the board did say the economy is broadly tracking on a path consistent with returning inflation to target in 2026 while preserving a lot of the employment gains. That really would be the Goldilocks solution. We get inflation back to where we want it to be some point next year and we don't lose lots of jobs. The bottom line, I suppose, Michael, is there's no certainty about which way the next move in rates is.
And that's probably the most troubling part of it, is just how uncertain it all is. Sean, now is as good a time as any to mention something. If you might have noticed something a little unusual pop up in the Fear and Greed playlist yesterday, and it is a little bonus episode that we're looking to do 1 or 2 times a week, and it is called Ask Fear and Greed. And basically, if you have a question about the economy, about business, anything, send it on through. Jump onto fearandgreed.com.au or LinkedIn or Facebook or Instagram. Send in your question and we will do our best to answer it. And when I say we, it will be you.
Yeah, it's we. It's joint. It's joint.
Yeah, it's joint. It's joint.
It could be a question about space.
Yeah, exactly. In which case, I will step up to answer that one. But yesterday's question, the one that you answered, was about inflation and about the impact of the tax cuts that came into effect on July 1, what that will mean for inflation. And it was a question put to us by a listener, Nina, well worth going back and having a listen to. And these are just little bonus ones at 3 or 4 minutes, well worth a listen because it just adds a little bit of context to the inflation debate, which of course feeds into what we've just talked about in terms of interest rates. Moving on though, Sean, local markets. How did they perform yesterday?
The S&P ASX 200 closed down almost 0.5% to 7,718 points. Would have been much worse, but for a really strong session among the energy stocks. That's thanks to higher energy prices. In fact, the energy index was the only one of the 11 sub-indices on the ASX 200 to close higher. Worst on the day was the property index. All the big miners and banks were lower. Among the large caps, Goodman Group closed down 2%, while National Australia Bank and Wesfarmers were both off more than 1%. Worst of the top 200 was retailer Lovisa Holdings. It dropped nearly 4%. Again, it was the coal companies doing best. Whitehaven, Coronado among the best performers. Best of the large caps was Woodside Energy, up more than 3%. The best on the day, at least among the top 200, was lithium developer Liontown Resources. It finished up nearly 8% after it secured a $250 million funding deal. Plenty of corporate news around. Yesterday, Bendigo and Adelaide Bank fell 1% after Chief Executive Marnie Baker announced she's stepping down. She's been there for 35 years, friend of the show. In fact, she's been on the show.
She certainly has. That's 35 years. That is a long time to be with one organisation.
Yeah, it's a fantastic stint. And very highly regarded, Marnie. Very highly regarded.
Yeah, certainly. Might be worth replaying that interview with her, because it was a really interesting insight into kind of running a bank, wasn't it? So we might pop that one in as the Sunday feature this week, Sean.
Excellent option. Good idea. Good idea.
Sorry, go on.
Going on with markets, Ramelius Resources upped its stake in fellow ASX gold miner Spartan Resources. Shares in drug maker Mayne Pharma fell 5% after it decided to pay investors $38 million to settle a court fight over alleged misleading or deceptive conduct and breaches of continuous disclosure obligations. Telco Superloop is expected to hit the top end of its full-year earnings guidance, pushing its share price up more than 1%. Iris, the financial services software company, said there was no evidence of unauthorized access to its production environment software or client data after a data breach earlier in the year. And Origin Energy acquired 20% of Australian decarbonisation startup Climate Tech Zero, which works with industrial companies on cutting emissions and energy costs.
Hey, after the show, Sean, you've got an interview coming up with Sarah Shaw, Chief Investment Officer and Global Portfolio Manager at 4D Infrastructure.
It's all about investing in listed infrastructure, which is this massive asset class, and it's a great way to diversify your investment portfolio. It tends to have fairly regular, steady income. So we talk about all the benefits of infrastructure as an asset class, also the opportunities in emerging markets. We also talk about things like water pipes in New York and the fact that they all have to be replaced at some point in the next decade or so. So there's investment opportunity there. It's just a great chat with Sarah about those opportunities in infrastructure.
Yeah, it is a good one. It's coming up a little bit later on after the show. What's happening in international markets?
Well, the start of the quarter on Wall Street offered a repeat of many previous quarters, i.e. tech stocks rallied. Apple jumped nearly 3% on reports it's preparing for a surge in iPhone 16 orders. Of course, I liked looking at where Apple sits on the stock market. It's now the second largest stock on Wall Street. Market capitalization of $3.38 trillion US. The largest stock is Microsoft once again. It was up 2%. Its market cap is $3.44 trillion US. Tesla was another strong performer. Its share price jumped 6% yesterday morning. Wall Street is heading into reporting season. There's a very high bar for earnings growth, according to analysts. Otherwise, oil prices are climbing, hitting a 2-month high yesterday on the back of geopolitical risks in Europe and the Middle East, as well as a hurricane in the Caribbean. Brent's trading above $86 US a barrel.
All right, Sean, we will be back in a moment with the rest of the day's business news. Sean, Labor's caucus has backed Prime Minister Anthony Albanese's decision to suspend WA Senator Fatima Payman.
The outspoken senator who voted with the Greens on a pro-Palestinian vote last week was suspended from caucus. Now, caucus endorsed the position of the Prime Minister. Basically, the reason was that by her own actions and statements, Senator Payman placed herself outside the privilege that comes with participating in the Federal Parliamentary Labor Party caucus. Mr Albanese said he was only Prime Minister because he had Labor next to his name, and that's true for everyone in the party. The Prime Minister also hit back at criticism. He didn't move fast enough, saying that showing restraint in this case and some compassion is a strength, not a weakness. Senator Payman has claimed that she was exiled and intimidated by colleagues. She said she'll abstain from all votes as she reflects on her future.
And staying in politics, the government's proposal to phase out live sheep exports passed the Senate on Monday night.
And that triggered a pretty ferocious response from some farming groups who have vowed to campaign in Labor-held seats in Western Australia. The National Farmers Federation accused the government of selling out farmers for political gain after the industry had made significant investments to address animal welfare concerns. That's always been the issue for the live sheep export industry. It's worth about $77 million, and the decision directly affects farmers, shearers, transport operators like truckers, those sorts of people. Now, Nationals leader David Littleproud, not surprisingly, is against the ban. He said if elected, the coalition will reinstate live exports.
And finally, in politics, the opposition said it would support the divestiture of Australia's major supermarkets, Woolworths and Coles, if elected.
Opposition leader Peter Dutton said the coalition has been worried about the rising cost of food and divestiture. Ooh, that's a tricky word, isn't it, Michael? Divestiture? Divestiture.
Surely there's an easier word for us to use here, isn't it?
Yeah. Well, I'd say it's interesting. So they're talking about divestiture powers. saying they'd be good to have. It's basically a tool. They're not saying they're going to do it, but they just want a range of powers available to help them change the culture of supermarkets. Divestiture would be the hardest whack, I'd imagine. I'm not quite sure what it means, though. Does it mean that you're breaking up the supermarkets?
I would imagine so.
That's what the word means, but that would be extremely, extremely extreme.
It would be the nuclear option, really,
it would be
wouldn't
the
it?
nuclear option, yes.
Which
So
seems kind of appropriate for an opposition policy, doesn't it?
yeah, probably.
Huh? Anyway, Sean, ANZ Bank has been criticised for charging fees to dead customers in an example of, quote, serious and systemic misconduct, according to the committee that oversees the banking industry's code of practice. I thought we left all this behind.
I'd hoped we'd left all this behind. Now, ANZ was sanctioned by the Banking Code Compliance Committee yesterday for failing to stop or refund fees charged to deceased estates as recently as last year, according to a report in the Financial Review. The banks paid remediation of $3.2 million to almost 19,000 estates, but told the committee that 90% of these cases involved fees and charges not prohibited by the code. The committee logically said 10% do relate to fees prohibited under the code, which is a level it still considers a serious breach. Banking Code Compliance Committee Chair Ian Govey said the significance of the deficiencies in ANZ's compliance frameworks was deeply concerning.
Goodness me. Now, wholesale power prices are set to jump by 50% in coming years as the building of clean energy generation and transmission remains a tad sluggish, Sean.
Yes, according to investment bank UBS, prices will peak in 2029 at $104 per megawatt. That's about 50% higher than last year's prices. It means unless the government steps in to give tens of billions of dollars of energy rebates, which is unlikely, consumers are going to have to pay much, much more for power. Power prices fell last year, kind of Goldilocks conditions, according to UBS. Plenty of coal-fired power generation, milder weather, more renewable generation. This, though, is unlikely to be repeated. There's also delays in projects like the Snowy 2.0 and the Central West Orana Renewable Energy Zone in New South Wales. That's both generation and transmission where there's sluggish growth, if any, and that is definitely helping drive prices higher.
Sean, TPG has upped its battle with Telstra, pushing into the content space via partnership with Foxtel Group's new TV and streaming aggregation platform, Hubble.
Australia's third largest telco has sat on the sidelines of the content wars, which have been widely viewed as a way to win share in the fiercely competitive telco market since the arrival of Netflix and other streaming services. Telstra and Optus have invested billions of dollars buying content, including sports broadcast rights and partnering with streaming platforms like Fetch, building their own services, that type of thing. In contrast, TPG has opted to focus pretty much on being a pure play mobile operator, according to a story in The Australian. However, that's all about to change. Hubble will be available for customers on TPG's flagship brand, Vodafone. The deal's about creating more value, thus hanging on to customers for longer.
It's getting quite intense, isn't it?
It is. It's a very exciting development, that one. I like more competition in that sector because that means prices will come down.
Absolutely. I'm very, very excited about that. International news now, Sean. This is a massive story, this one. Donald Trump has won substantial immunity from official acts taken as president after the majority Conservatives on the Supreme Court ruled that presidents and ex-presidents cannot be charged for things they do as part of their core duties.
Yes, they can, however, be charged for their private conduct. The 6-3 decision was made along ideological lines, with a minority Liberal judges releasing a ferocious alternate judgment. The decision pretty much ends any chance of the former president being tried before the November election. The decision ruling says the president or ex-president is, and I quote, entitled to at least presumptive immunity from prosecution for all his official acts. The minority decision says that under the ruling, if the president orders the Navy's SEAL Team 6 to assassinate a political rival, immune. Organises a military coup to hold onto power, immune. Takes a bribe in exchange for a pardon, immune. It added that the decision makes a mockery of the principle that no man is above the law. Now, Trump quickly took to social media saying, all in capital letters I'd add, big win for our Constitution and democracy, proud to be an American. President Joe Biden said the decision is an abandonment of core principles of American democracy and will allow Donald Trump self-defining power if he's elected in November. He said Donald Trump will now be free to ignore the law.
Wow. That is huge.
It is an extraordinary ruling, no matter what side of politics you're on. To suggest that the president is above the law is extraordinary.
Now, we've got the Fear and Greed weekly newsletter coming out in just a couple of hours. Sean, can I take a punt and say that story is probably going to get a mention in the newsletter today?
That story, as part of a US story more generally, it does. It does definitely get a mention.
Excellent. Well, if you want to hear what Sean really thinks about this story, head along to fearandgreed.com.au and pop your email address in. The weekly newsletter is entirely free and it comes out every Wednesday mid-morning. So jump on now and sign up and you will get this week's edition. Sean, Hurricane Beryl. That's a great name for a hurricane.
It is a cracking name, isn't it? Yeah.
Yeah, she's delivering catastrophic winds and intense rainfall, along with a storm surge that, I mean, these things are life-threatening because they are just so intense across the windward island in the Caribbean. The storm is gathering ferocity. This is massive.
Sure is. It's very possible that it's a Category 5 storm by now. Yesterday, it made landfall on Grenada with wind speeds of up to 240 kilometres an hour. It's the strongest hurricane to pass through the region since records began in 1851. Early reports said that no one had lost their life. Fortunately, huge amount of damage though. It's not actually expected to hit US oil operations, though it did push up Brent prices over the past 48 hours or so. There is still a chance of disruption later this week. More broadly, people are worried that such a severe storm this early in the season really doesn't augur well for the next few months.
And finally, Sean, the Boston Celtics, the basketball team that won the NBA title last month, is up for sale with a price tag likely to be around the $5 billion mark.
Well, if you're going to sell, you may as well sell at the top. And the Celtics won last month's NBA, so they're the most successful team in the National Basketball Championship history. The team was purchased for $360 million 22 years ago by a consortium of wealthy individuals, including venture capitalists and real estate developers. Forbes now values it at $4.7 billion, according to a report in the Financial Times. Now, the controlling family in the consortium are the Grousbecks, famous family around the Boston area. The decision to sell, according to the family, was made for estate and family planning considerations. I suppose that's as good as anything. Currently, the record sale for a basketball team is the Phoenix Suns and its Women's National Basketball Association sister franchise, the Mercury. That was $4 billion back in 2022.
So purchased for $360 million, sold, up for sale for around $5 billion.
Let's say 5, yep.
That's a pretty good investment.
Decent investment, definitely.
God, I mean, still you needed to stump up $360 million in the first place, and I didn't have that in 2002. I don't have it now either. Anyway, good story, Sean. Up next is the Fear and Greed Daily interview. Sarah Shaw from 4D Infrastructure is your guest.
Yep, all about investing in infrastructure, listed infrastructure, not just in Australia, but around the world.
It is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you sign up for that weekly newsletter that I mentioned just before. Thank you, Sean.
Thank you, Michael.
It is Wednesday, the 3rd of July, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.